Okay, so you want to own a mansion.
10,000 square feet, a sweeping driveway, a pool out back, maybe a home theater and a wine cellar. You picture the housewarming party, the space, the sheer statement of it. You've saved up, or you've sold your last house at a profit, and you're ready to buy the biggest, most impressive home you can afford.
That's the moment everyone thinks is the finish line. Sign the papers, get the keys, you've made it. Here's the problem.
The purchase price of a mansion is the smallest financial decision you'll make in the entire experience of owning one. Everything that happens after closing, the property taxes scaled to a home most tax assessors barely know how to value fairly, the maintenance bills that don't scale the way you'd expect from a house nearly twice as big, the staff you didn't think you'd need but genuinely do, the insurance underwriters who look at your address and quietly reclassify you into an entirely different risk category. All of that is where mansion ownership actually happens.
A mansion isn't really a bigger house.
It's a completely different category of asset that happens to have bedrooms in it, one that behaves more like owning a small, aging commercial building than like owning a larger version of a normal home. And once you understand that difference, everything about what a mansion actually costs, and why so many of them sit on the market for years even among genuinely wealthy buyers, starts to make sense. Let's start with the purchase price itself, because even this first number is more complicated than it looks. Depending on the market, mansion can mean anywhere from roughly 5,000 square feet in a mid-tier metro area to well over 20,000 square feet for the kind of estate properties that make headlines, and pricing varies enormously by location, from several $1 million in most parts of the country to tens of millions in the most competitive coastal and resort markets. But here's the detail that surprises a lot of first-time luxury buyers. Large, unique homes are genuinely difficult to appraise accurately, because the standard appraisal method real estate relies on, comparing a property to recent sales of similar nearby homes, breaks down once a property becomes unique enough that there simply aren't enough truly comparable recent sales nearby to build a reliable comparison against. This is exactly why luxury home transactions frequently involve extended negotiation periods and sometimes require specialized luxury appraisers with specific expertise valuing high-end unique properties, and it's also exactly why mansions, more than almost any other category of real estate, can sit on the market for a genuinely long time, sometimes years, waiting for the specific buyer whose taste, budget, and needs align with that particular property's unique combination of size, style, and location. Now, the property tax bill, because this is where a lot of new luxury buyers get their first real shock, and it's a recurring cost, not a one-time closing expense. Property tax is typically assessed as a percentage of the home's assessed value, and on a home valued at $5 million to $20 million or more, even a modest-sounding tax rate translates into an enormous annual bill, commonly running anywhere from $50,000 to $250,000 or more a year depending on the specific state, county, and local tax rate, with some of the highest tax jurisdictions in the country pushing meaningfully past that range on the largest estates. This is a bill that arrives every single year, indefinitely, regardless of whether the owner is actually living in the home full-time, renting it out, or leaving it vacant for months at a stretch, and it's a cost that scales with the assessed value of the property, which means any renovation or improvement that increases the home's value can, ironically, increase the annual tax burden right alongside it.
Insurance is the next major recurring cost, and it behaves fundamentally differently on a mansion than it does on an ordinary home.
Standard homeowners insurance policies are typically capped at coverage limits that a multi-million-dollar property will exceed easily, which means mansion owners almost universally need a specialized high-value home insurance policy, underwritten by insurers who specifically focus on this category of property. These policies commonly run $15,000 to $50,000 or more a year in premium, depending on the home's value, location, and specific risk factors, and unlike a standard policy, high-value home insurers frequently require detailed appraisals of the home's unique architectural features, custom materials, and contents, because replacing a hand-carved staircase or a custom-imported stone facade after a fire or flood isn't something a standard rebuilding cost formula can accurately estimate.
Location dramatically affects this number too.
A mansion in a coastal flood zone, a wildfire-prone area, or a region with significant hurricane exposure can face insurance premiums considerably higher than the baseline range, and in some of the most exposed markets in the country, high-value homeowners have increasingly struggled to find insurers willing to underwrite coverage at any price, a genuinely significant and growing problem across parts of the luxury real estate market in recent years as insurers have reassessed their exposure to climate-related risk. Now let's talk about utilities, because this is one of those costs that people assume scales linearly with square footage, and it genuinely doesn't. It scales worse than that. Heating and cooling a 12,000 square foot home isn't simply 4 times the cost of heating and cooling a 3,000 square foot home, because larger homes frequently feature higher ceilings, more exterior wall surface area relative to interior volume and certain architectural styles, larger windows, and often multiple HVAC zones and systems that each require their own maintenance and operating costs. Monthly utility bills, electricity, heating, water, on a genuinely large estate home commonly run $2,000 to $5,000 or more a month, and that's before accounting for amenities like heated pools, extensive outdoor lighting, or climate-controlled wine storage, each of which adds its own dedicated and often substantial utility draw. Annualized, utilities alone on a large estate frequently run $30,000 to $60,000 or more a year, a number that regularly surprises buyers who mentally budgeted based on simply scaling up their previous, more modest home's utility bill. Here's where the real financial reality of mansion ownership starts to diverge sharply from what most buyers expect walking in: staffing. A home of this size genuinely cannot be maintained by its owners alone, not because owners are incapable, but because the sheer physical scope of the property, the grounds, the pool, the mechanical systems, the sheer square footage requiring regular cleaning, makes it a practical impossibility for most owners' schedules, which is exactly why mansion ownership, at real scale, functions less like owning a house and more like running a small facilities operation. A full-time or part-time housekeeper commonly costs $40,000 to $80,000 a year depending on hours and location. Groundskeeping and landscaping for a genuinely large estate property, multiple acres, formal gardens, extensive lawn area, can run $30,000 to $100,000 or more a year depending on the property's scale and how elaborate the landscaping design is. Pool maintenance alone, for a large or elaborately designed pool, commonly runs several thousand to over $10,000 a year. Many mansion owners, particularly those with the largest properties, employ a dedicated estate manager or property manager specifically to coordinate all of this staff and vendor activity, a role that can itself command a salary well into six figures for the largest, most complex properties. Added up, and staffing costs alone on a serious estate property frequently run $100,000 to $300,000 or more a year, an entirely separate and often unbudgeted category of cost that has nothing to do with the mortgage or the property tax bill. Maintenance and repair costs on a mansion follow a similar pattern of scaling worse than square footage alone would suggest, because larger, older, or more architecturally elaborate homes frequently feature custom materials, specialized mechanical systems, and construction details that are genuinely more expensive to service and repair than the standardized materials and systems found in typical mass-produced homes. A roof replacement on a large, architecturally complex estate home, particularly one featuring slate, custom tile, or other premium materials rather than standard asphalt shingle, can run into the hundreds of thousands of dollars rather than the tens of thousands a comparable repair might cost on an ordinary home. HVAC systems on estates with multiple zones and specialized climate requirements, for wine cellars, art collections, or historic preservation considerations, require correspondingly specialized and expensive maintenance and eventual replacement. A widely cited rule of thumb in real estate and property management circles holds that annual maintenance costs for a home commonly run somewhere around 1 to 2% of the property's value, and on a $10 million estate, even the low end of that range translates into $100,000 a year in ongoing maintenance, a figure that compounds with every additional custom feature, every acre of additional grounds, and every year the property ages without major systems being proactively updated. Let's talk about a cost category that's easy to overlook entirely until you're actually living the reality of it: the sheer logistics and vendor complexity of keeping a large, complicated property running smoothly. A mansion typically involves managing relationships with a genuinely large roster of specialized vendors, pool service, landscaping crews, HVAC specialists familiar with the home's specific and sometimes unusual systems, security system monitoring, elevator maintenance for homes featuring a residential elevator, generator maintenance for homes with backup power systems sized to keep an enormous property running through an extended outage, and coordinating all of this, scheduling, quality control, making sure nothing falls through the cracks, is itself a genuine, ongoing time and management burden, which is exactly why the estate manager role we mentioned earlier has become such a standard feature of how genuinely large properties actually get run day to day rather than treated as an optional luxury. Now, here's a dimension of mansion ownership that surprises people who assume real estate simply appreciates reliably over time: liquidity, or rather, the profound lack of it, in this specific category of the housing market. Ordinary homes, particularly in the middle price tiers of most markets, sell relatively quickly because there's a large pool of potential buyers actively shopping in that price range at any given time. Mansions face a dramatically smaller buyer pool, simply because far fewer people can afford, or want, a home of that size and price point, which means genuinely large luxury properties commonly sit on the market considerably longer than typical homes, sometimes a year or more, even in a generally healthy real estate market, and even longer during any broader market softness. This illiquidity has real financial consequences beyond simple inconvenience. An owner needing or wanting to sell quickly, due to a job relocation, a change in financial circumstances, or simply a change of heart, frequently has to accept a meaningfully lower price than the home's theoretical market value in order to attract a buyer within a reasonable time frame, a dynamic that's considerably less pronounced in more liquid, mainstream segments of the housing market. This illiquidity connects directly to a broader point about appreciation that's genuinely important to understand before buying. Unique, ultra-high-end properties don't appreciate as reliably or as predictably as the broader housing market, precisely because their value depends so heavily on finding a specific buyer whose taste and needs align with that specific property's unique features, rather than on the more broadly applicable supply and demand dynamics that drive appreciation across the mainstream housing market. A mansion built around a specific architectural style or a specific set of highly personalized features the original owner loved, can genuinely limit the pool of future buyers willing to pay a premium for those same features, and in some documented cases, extremely large or highly customized spec mansions built speculatively without a specific buyer in mind have sold, after years on the market,
for meaningfully less than their original construction cost, a genuinely important cautionary data point for anyone assuming size and luxury automatically translate into reliable long-term appreciation.
Let's talk about renovation and customization costs too, because mansion owners frequently want to put their own stamp on a large property after purchase, and the costs here scale dramatically compared to a typical home renovation. A kitchen renovation on an estate-level property, featuring commercial-grade appliances, custom cabinetry, and premium stone countertops throughout a genuinely large kitchen footprint, can easily run several $100,000 rather than the tens of thousands a comparable renovation might cost in a standard-sized home. Adding amenities that have become increasingly expected in this segment of the market, a home theater, a wine cellar with proper climate control, a home gym, a guest house or pool house, each represents its own substantial construction project, commonly running well into six figures individually, and each adds its own ongoing maintenance and utility burden on top of the base costs we've already discussed. Security is another category that scales meaningfully with a property's size, visibility, and the owner's public profile. Comprehensive security systems for a large estate, perimeter monitoring, video surveillance covering extensive grounds, sometimes gated entry systems with dedicated staffing, can run from several $1,000s for a basic system up to well over $100,000 for the most comprehensive setups on the largest, most security-conscious properties, plus ongoing monitoring fees and, for owners who employ dedicated security personnel, salary costs that add yet another layer to the staffing expenses we discussed earlier. Now let's pull all of this together into what a real annual carrying cost picture looks like for a genuine mansion-tier property, because this is where the financial reality becomes unmistakably clear. Combining property taxes, insurance, utilities, staffing, routine maintenance, and the amortized cost of periodic major repairs and system replacements, a realistic total annual carrying cost for a $10 million to $20 million estate commonly runs somewhere between $300,000 and $700,000 or more a year. Entirely separate from and in addition to any mortgage payment on the property itself. That range translates to roughly 3 to 5% of the home's value being spent every single year simply to maintain and operate it, a figure that dwarfs the carrying cost percentage most people mentally associate with owning a typical home, and one that represents a genuinely significant, permanent, and recurring financial commitment that continues regardless of whether the home appreciates, depreciates, or simply sits there. This is precisely why financial advisors who specialize in ultra-high net worth clients frequently counsel a specific rule of thumb before a client purchases a home at this scale: the ongoing carrying costs, not just the purchase price and mortgage, need to be sustainable against the buyer's actual liquid income and assets over the long term, not just affordable at the moment of purchase. Because unlike most other categories of spending, these costs don't meaningfully decrease if the owner's financial circumstances change. A property tax bill and a roof that needs replacing don't care whether the owner's income dropped this year. So let's build the two honest scenarios for mansion ownership, because this is where the two very different versions of this experience genuinely diverge. In the optimistic scenario, you've purchased in a market with genuine, sustained demand for large luxury properties, you've budgeted realistically for the full carrying cost picture rather than just the mortgage and taxes, you've maintained the property diligently to preserve both its condition and its eventual resale appeal, and you've either held long enough to ride out a full real estate cycle or purchased a property with genuinely unique, broadly desirable features, waterfront access, a particularly sought-after architectural pedigree, a location with limited comparable inventory, that helps insulate it from the illiquidity risk that affects more idiosyncratic properties. Under those conditions, mansion ownership can deliver both a genuinely exceptional living experience and reasonable long-term value preservation, with the substantial ongoing carrying costs functioning as the real, transparent price of that experience rather than a threat to the underlying investment. In the realistic scenario, a few unglamorous things happen that aren't exotic risks at all. They're the ordinary experience of owning a property at this scale. A major system, the roof, the HVAC infrastructure, a specialized custom feature, needs replacement earlier than expected, and the specialized materials and labor required push the actual repair bill well past what a standard home's equivalent repair would have cost. Insurance renews at a meaningfully higher premium after your insurer reassesses regional risk following a wave of claims elsewhere in a similar climate zone. A key staff member, the groundskeeper or estate manager who understood the property's specific quirks, leaves, and replacing that institutional knowledge takes time and money. When it eventually comes time to sell, whether due to a life change or simply a decision to downsize, the property sits on the market considerably longer than anticipated, because the pool of buyers for a home this specific and this expensive is genuinely small, and the eventual sale price ends up meaningfully below the number the owner had mentally anchored to based on the home's assessed value or original purchase price. Under those conditions, the total real cost of the mansion ownership experience, the purchase price, years of carrying costs running several $100,000 annually, and an eventual sale that doesn't fully recoup the investment, can represent a genuinely substantial permanent cost, one that's entirely normal and predictable for this category of property, but one that catches buyers who focused primarily on the purchase price and the dream of the space itself, rather than the full, multi-year financial picture, genuinely off guard. So does owning a mansion actually make financial sense? The honest answer is that, much like the ultra-luxury vehicles we've covered on this channel, a mansion is fundamentally a lifestyle purchase wearing the appearance of a real estate investment, and the buyers who end up genuinely satisfied with the decision years later are almost always the ones who understood and budgeted for that reality from the very beginning, rather than the ones who assumed a bigger house was simply a proportionally bigger version of the ordinary home buying experience they'd been through before. The square footage is real. The staff, the insurance, the utility bills, and the illiquidity when it eventually comes time to sell are equally real, and none of them show up on the number printed at the top of the listing. A mansion doesn't just cost what you pay for it. It costs what it takes, every single year, to actually keep it running the way the listing photos promised, and that number is the one that actually determines whether the dream ages well or becomes the thing quietly draining the bank account behind a beautiful front door.